Welcome back, and joining us to put the day's markets action into perspective is Annatjie Van Rooyen from MyWealth Investments. Thank you so much for your time, Annatjie. It seems that the markets just decided to be busy today. Let's actually start off with that U.S. inflation and expectations for the Fed. Of course, that inflation print for May coming out slightly lower than what markets had anticipated. We are seeing quite positive reaction from the market there. Does this signal a brighter expectation in terms of what should come out of the Fed, and particularly a commentary later on tonight?
Hello, Annatjie, and thank you for having me. Yes, definitely good news for the markets. We saw the headline number coming in at 3.3% and the core number at 3.4% year on year. So for the headline number, that was no increase month on month. And for the core number, which excludes food and energy, that was 0.2% increase month on month. Much better than expected. And I think the main categories responsible for that drop in inflation was energy and gasoline prices. We immediately saw the bond market and the equity market picking up after those numbers were released. And the bond yields actually came down by over 3% in the US.
Yeah.
And of course, the dollar slid, the rand strengthened. So all in all, very good news. And obviously, it is highly correlated with the FOMC announcement later tonight, not the announcement so much, but the conference and the summary of the economic projections that we're all waiting for now. So unfortunately, into the close, our market pulled back again because there is that uncertainty. We don't know how dovish or how hawkish Jerome Powell will be, but bets are increasing for a rate cut in September now. And then if we are lucky and this moderation can continue, not impossible to get another one at the end of the fourth quarter this year.
Well, it seems that everything's good in the hood, and we'll wait to see if Powell's comments actually align with market expectations at this point. I want to start off in terms of the company news that we're looking at today with Naspers and Prosus that sneaked in their trading updates after market close yesterday at 5:30. So, of course, heavyweights there on the JSE saying that they saw accelerated profitability in Tencent and also their other e-commerce businesses. They're expecting an increase in their core headline earnings per share. Not much reaction from the market as the last time, at least I checked. Was the update just expected?
It looks like it. As you say, there wasn't much of a reaction, and there's quite a discrepancy between the expected earnings per share and the headline earnings per share. So the number that you must look at here is the core headline earnings per share, because that excludes the non-operational items. And then they've also mentioned that they have amended figures to reflect the impact of the removal of the cross-shareholding and also the sale of OLX. So the bottom line is that their investment in Tencent continues to pay off, and they are still well positioned to benefit from the growth in consumer consumer spending or online consumer growth.
Well, something that had a great reaction is SPAR. That share popped by about 13%. Of course, you're looking at the results and also still seeing some of the headwinds that they are experiencing there. But just this optimism that we saw on the reaction, is that maybe more to do with the cautionary announcement that they took out, that they have signed key terms with a third party that is clearly willing to buy SPAR's Poland business?
Yes, I think the share price movement definitely has more to do with the cautionary announcement than anything else.
Yeah.
Because that deal and the fact that the buyer is committed to retain the SPAR brand going forward will have such a significantly positive impact on earnings going forward. And before this cautionary announcement, SPAR was trading at a forward PE of 8.9 times. So if they can pull this deal through, that price earnings ratio can unwind quite significantly. So it does look like the company offers very good value at these levels.
Yeah. I mean, besides that, though, just looking at the numbers, we did have turnover growth, but there we saw a decline in headline earnings per share, diluted headline earnings per share as well. Do you think that it's just the macro environment that the business is currently operating under, and of course the increased competitive landscape at this point?
Yes, and look, they're still suffering from that hangover of the SAP implementation
Yes.
earlier on, and they've had corporate governance issues and change in management. But it does seem like they're turning that ship and they're regaining focus.
Okay.
So I think it's a very nice recovery story, this.
Well, a ship that seems hard to turn around is MultiChoice because revenue, you also have to look at which figures you look at, organic growth or the group figures. For example, with revenue, we had revenue declining 5%, but on an organic basis, it was up 3%. But all in all, we did see a wider loss there when it comes to the headline loss per share. What did you make of MultiChoice?
Well, it was well within the guided range. The management guided for a drop in headline earnings of between 18 and 22%. They came in with a 20% drop in headline earnings. So obviously it's a weak consumer environment that they operate in, and they saw a 9% drop in subscribers, obviously because of the weaker economic environment. And then their exposure to Nigeria, the devaluation of that currency also cost them a lot of money, and their expenditure in Showmax. They've spent a lot of money in Showmax. So, yeah, not a great result, but look, it remains underpinned by the corporate action.
Yeah.
So, luckily for those shareholders, that corporate action is supporting that share price, because at this point in time, their liabilities exceed their assets.
Yeah.
But even though that share price is underpinned, one must remember that they still face regulatory hurdles to get that corporate action pulled off.
All right. Well, Annatjie, we have come to that time where we go into your stock pick. What are you picking today?
Yeah, well, I was quite defensive because I had to provide a stock pick before the CPI numbers came out in the US. So I went for ABSA because of that forward dividend yield of 10%, which is quite attractive if you compare it to its peers. But the whole banking sector in South Africa is offering very good value for investors. You can pick any bank. I just went for the yield because it was a defensive play.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today, Annatjie. That was Annatjie Van Rooyen from MyWealth Investments.